No? Right. Hello, everyone. Welcome to the inaugural session of the Saudi Sector Spotlight Series. I'm George Hanna. I lead State Street's investment management business here in the Kingdom. It is my distinct privilege to moderate today's session on the insurance sector, a sector that is witnessing one of the most profound and rapid transformations in the country. We're going to be having a conversation that aims to give our esteemed panelists of insurance executives a platform to describe those broader shifts that are reshaping their industry. Now, we only have 30 minutes, so we're going to have to go fast. But my hope is that by the end of this session, we would have treated one central question. How is the sector building a sustainable foundation for growth and profitability and resilience? And to get there, we are going to be addressing three main factors. How regulation is unlocking growth, how capital is being deployed more efficiently, and how profitability can be sustained through disciplined and risk-based pricing. Now, even though our panelists are industry veterans and hardly need any introduction, allow me please to introduce Mr. Tal, CEO Tal Nazer, CEO of Bupa, Dr. Othman AlKassabi, CEO of Tawuniya, and Mr. Saud Ghonaim, CEO of Rajhi Takaful. Welcome. I think it is the initial perspective of laying the land, of seeing the evolution of the insurance sector, starting with the earlier times until its most recent evolution today. And given, Abu Faisal, your long history of serving in the sector, and given that you are now the longest serving CEO of a public company, I would like to start with you giving us the lay of the land and how things changed over time for you.
Bismillah ar-Rahman ar-Rahim, and thank you for having me. I think now this is a very exciting time for the insurance industry. And I've been here a long time. And I think if I look at the history, I think we started in 1997 in Bupa in Saudi. And it was a time where our friends from Tawuniya were the only licensed insurance company in Saudi. And it was a chaos at that time. So it was a time where there was no regulations, nothing, no growth, no protection for the members or the customers. And the only companies that could operate in Saudi were brokers or some companies that were licensed in Bahrain. And actually at that time, Bahrain was the capital of the insurance industry in the Middle East. And then when SAMA came in with the regulations and coming up with the regulations and basically mandated all insurance companies have to be licensed and be publicly listed, and CHI, which at the time used to be called CCHI, came in, the industry literally moved from, it was a time about establishing regulations, and the industry moved from almost zero to today where the health insurance market is around 40 billion Saudi riyals. Overall, the total insurance is around 70 billion riyals. So taking an industry from almost zero to where it is right now is actually quite impressive, where, for example, the number of health insured in Saudi moved from zero to today, which is around 13 million people. So big growth in the industry and a lot of growth in the supporting industries behind it. But it was a time about regulation establishment. I think what is exciting right now with the royal decree with the insurance authority is that we're taking the industry from governance regulation to where with Vision 2030, how much can we participate as a percentage of GDP? It's about growth. So the mindset of the regulators and and supporting the insurance industry in relation to growth, profitability, it's just starting to be right now. So I think we're extremely proud of what the industry has developed, but I think what's coming ahead is even more exciting.
It's actually very interesting that you give that historical perspective, because all of a sudden now imagining that a very ambitious goal of almost doubling the industry over the next 5 years now looks a lot more attainable given where the industry have developed over time. Dr. Othman, there was an announced planning to introduce solvency as a framework within the new regulatory regime, specifically on Solvency II, and then perhaps also introducing the accounting standard of IFRS 17. How do you expect capital to become more of a lever to the industry, or is it more going to be of a constraint?
Yeah. So thank you very much again for having me with great colleagues here. And it's also exciting to see insurance becoming part of the FII, in a specific track. So thank you for the organizing for having this, organizing this event. And jumping to your question, I think, and also following up on Tal's answer, following that regulation that was founded in the beginning of the insurance market evolution, I think now it's about time to innovate when it comes even to the regulation, to be able to allow for innovation to happen. And I think Solvency II or risk-based capital can address the difference or different type of insurance companies' appetite to underwrite risk. I'll give you an example. For us, we launched TRI as a digital insurance company in the beginning of 2024. And if we will follow the regulation by standard, we have to deploy 300 million Saudi riyal as a capital for TRI. Where if you follow the risk-based capital model, you only need 100 million. And this gives you that kind of, or losing up the entry barrier to innovate when it comes to digital company or digital attackers and what have you. And on the other hand, if you want to establish a reinsurance company that is, having an appetite to underwrite different type of risk, then you would need a higher capital, and this protects the market. So risk-based capital can address those both type of risk, and between the two extreme, it addresses the right capital for the right risk. Introducing the accounting standard of IFRS 17, I think it also gives a better understanding of how do you protect your balance sheet. I think it's still a challenge for the investors and for the market to abide by that standard, and how can we have that unification of the financial reporting. Mm-hmm. But, we've seen the market, reporting better profitability when it moved to IFRS 17. At that time, the macroeconomics was in favor, so the interest rates were high. So you can report unrealized gains in multiple assets that, affect the companies positively. And also, it can give you additional kind of cautioning if you foresee in contracts that might go into losses, so you can at the spot provision for onerous contract, and then you release them as you go. So also that's apply another protection to your balance sheet. So in summary, both yes, there is regulation and standardization to protect the market overall, but with the new, inshallah, insurance law, it will allow us also to tackle the ambitious goal of doubling the non-oil contribution from 2.5 to 3.5%, with a growing economy. So it's
That's right.
يعني, control with enablement to grow.
Yeah. So there is obviously a drive towards more optimized use of the capital. So I was wondering if, from your perspective, would those constraints and those requirements act as raising the bar to other players, to smaller players, or is it really contributing also to the overall health of the industry?
Thank you, George. It's my pleasure being here. I think I agree with Abu Yusuf. I don't see it as a constraint. It is an opportunity for all insurance company to invest in their risk analytics on the data to enhance their capital adequacy. It's important now that they embed risk awareness in all or in every decision, from selecting the product, pricing, investment. So I think it is an opportunity. We see it as an opportunity. The company now can differentiate by following disciplined pricing, and eventually and this company will be rewarded from investor perspective, from rating perspective, and hopefully they will have more room to be more innovative.
Absolutely. Abu Faisal, if I can just tie the knot with you here, do you see the move to risk-based capital driving consolidation from your perspective in the industry, or encouraging specialization and a healthier competition landscape?
I think it will ultimately would reward insurance companies that have managed their risk well, and it will require basically companies that haven't really managed their risk well to increase their capital. And I think what's going to happen is a lot of the shareholders are going to be asking, do we need to put the money or do we need to merge? So it's going to, I think it's going to bring a lot of discipline into the industry, which is going to be a fantastic thing. And I think it will help the industry mature.
Now, I think since we're having the conversation with you, health inflation and X-Pro is a major conversation, especially on the healthcare side,
Yes.
obviously. So those have kept margins tight even as demand rises. How is Bupa adapting its model to compete on value and efficiency
Okay.
rather than just on price?
I think it's a very good question, and you're having three questions in one question.
Yeah.
And I'll tackle it one by one. I think in medical inflation in Saudi is a serious issue. So it's been running at double digit for many years. I think, for example, all my meetings with all the CEOs and all our customers 6-7 years ago, the discussion is about how do you improve service, how do we talk, all of that. Right now, I would probably say 100% of all my discussion is why medical inflation is high. And underneath that, there are a lot of things that have factored into the double-digit medical inflation we're seeing in relation to the quality of the medical billing, the heavy fees within the industry. Obviously, we continue to sell an extremely generous product, and also a lot of awareness. And then the question becomes, how do we work as insurance companies? What model do we evolve? But also, how do we work with the regulators to tackle medical inflation? So it's a very big topic that I think if you ask us how do we sleep at night or what makes us awake at night is actually medical inflation. In relation to X-Pro, which is the second question, I think the challenge is the medical inflation, and can we manage the risk around it well? And it's going to be a factor of, are there adjustments in the products? But the only tool that insurance companies have right now is actually pricing correctly for the risk of X-Pro. And I think we've built an experience over the last 2 or 3 years where we understand the risk and required to price accordingly. On the third topic, how are we doing? I think one of the huge benefits that we had with Vision 2030 and basically insurance authority in relation to adapting regulation is that it allowed insurance companies to invest into vertical integrations and to diversify the risk and enhancing and strengthening the proposition that we have for our customers. So we no longer become purely an insurance company taking a risk and paying the claims. And that's the model that happens into a lot of countries in the world. So we've been focusing a lot in relation to investing in digital health, population health, create stickiness around that, investing in primary care. And I think what is that happening, when that happens, it's going to give a lot of options for consumers. It's going to improve the experience. Hopefully it can support in containing medical inflation and also growing a lot of industries beneath that, which is going to be fantastic للمملكة وللسعودية. So if you look at 2-3 years ago, the big players were, I would probably say, in the health and health insurance industry are insurance companies and hospitals. You're giving opportunities right now for primary care, digital care, home health care, medication delivery. So a lot of industries are starting to grow because of the opening of regulations, huge investments, huge employment. So it's a very exciting. So it's like the whole industry is being disrupted and everyone is trying to create an angle on how to play with it.
Absolutely. And Abu Yusuf, from your perspective, from a Tawuniya's multi-line perspective, how are you taking advantage of both the horizontal as well as the vertical integrations and acquisitions?
Yeah, let me first second those on the way we should approach the market, and I believe insurance companies has to move from paying for claims to paying for value, and also we need to think how can we use that in order for us to change the way things are happening on the health ecosystem. And maybe our story has, on top of what Buzz mentioned, is how can we also factor that in the other lines of business. So today, Tawuniya managed in the last 5 years, and I don't want to talk about how did that translate into our financials. Alhamdulillah, we had great performance in the last 5 years, and we've followed a guiding principle of focuses on the core by disciplined pricing and claims optimization, and also being beyond an insurance provider. So how can we retain our customers and reduce the customer acquisition cost and have a better customer stickiness through investing in vertical and horizontal integration? Today we have huge investments in clinics, huge investments in the mobility ecosystem. We just acquired 25 workshops. We have also invested in digital marketplaces, so you can sell your car, buy your car. We invested in the telematics. And before the end of this year, inshallah, we will launch our first reinsurance company. We just talked about the digital insurance, and gathering this under a unit called the corporate development within the company allowed us to look at the whole value stream and see how can we invest and open opportunities for us and for our partners to disrupt that market.
You would be a direct beneficiary of the 30% cession rule right now, right? With the expansion into reinsurance business.
Yeah.
Want to touch a bit, like in 30 seconds on that?
Yeah. So if you look today, there are 3 drivers for our profitability. That's the profits from operations, profits from investments, and now the profits from the ecosystems. Reinsurance for us is And it's a good example for the regulation when it works to enhance the industry. Now, there is a regulation that says 30% of the premiums have to be ceded within the Saudi market. And today we have our friends in Saudi Re who operates alone. Now, Riyadh Re will enjoy that benefits for the facultative insurance and also for the treaties. So again, if you look into this, the exposure that the investors today are having will not be only in insurance. They will have an exposure in insurance, reinsurance, and the ecosystems give them a better return on equity with less volatility across, the long-term investments than only having a classical way of dealing with it as an insurance company.
I really want to go back to the telematics portion and the utilization of technology, to your point, but you touched upon something that is important, which is distribution and the platform of distributions. Abu Abdullah, how is that reshaping the Takaful model for you? You've adopted a different path and you were relying on digital distribution framework. How is that improving your customer acquisition costs, and how is it really translating into your business model as a whole and your financials?
Actually, digital is in the core of our strategy.
Mm-hmm.
Not only to bring efficiency, but also to serve many customers and increase the reach from embedded insurance throughout the ecosystem, whether through the bank, the travel, and many platforms that bring insurance to the daily life of people, that will help to increase the insurance penetration. In health, we are investing in digital virtual doctor, telematics, gamification that reward client for their healthy life, like Hayat X, and so on. So it's very important, and this is what's going to reshape the insurance in the future, is the digital.
Exactly. But I think this is the bloodline for any business, right? Being able to reach and be close to your clients and to your customers in an efficient way. How are you tackling this? You have an interesting story at Bupa. No?
I mean, we created a separate company. So in relation to, which is Care Connect, which is basically purely focused on digital health and purely focused on data, and basically, to me, it's the only way you're going to be able to differentiate going forward in the future, because as an industry, it's not easy to differentiate. You cannot differentiate from just a good approval or a good call center or paying the claims fast. I think these are becoming the basics for every member of every customer. And then the question becomes, what else can we do? What else can we create stickiness with the customers? What else can we do, especially, for example, in health insurance in relation to longevity, wellness, all of that. And it's all about data. It's all about data, and it's in relation to what can we do with it, what kind of services behind the data can we provide the customers. And to us, that's going to be the future of the insurance industry, not only in Saudi, but globally.
Yeah. Abu Yusuf, let's go back perhaps a little bit on the 2 points that you had mentioned on customer acquisition, on the distribution, but also talk to us about your experience on the telematics side.
And we had a different angle to as a use case. And of course, digital and data is the core of it. But alhamdulillah, we've used telematics in the motor, for example. Those who tried it, we measure 5 things. We measure speed, acceleration, brake, use of phone. And then we reward people on a weekly basis. And we created what we call Tawuniya drive. And with that, we managed to retain 90% of those customers who tried that. And the other hand, we applied it in health, where we use Vitality. It's again a gamification that managed to, align the incentives between the members, the employer, and us as the insurance company, where we incentivize healthy lifestyle. We've also had that in the underwriting. So today, in mobility, for example, we use more than 150 underwriting factors. In general, we use that. And health also, we've managed to use it on fraud detection. So end-to-end journey has been we capitalize on the AI. So turnaround time and mobility claims, for example, used to be one of our pain points. Today we've managed to reduce that by 60%, allowing the customers to stay within Tawuniya. And this, reduces again every time you go and you try to acquire new customers, and that's the essence of how can you use digital as an asset to grow in the market. I see
I'm afraid the time had run out really faster than I thought. Thank you so much for your time. Please join me in thanking our speakers today.
Thank you.
Thank you very much.